Okay. Well, I've got 6 o'clock Pacific time straight up. I want to welcome all of you, but we know a lot of people are joining us right now, and um, we try to be as punctual as we can. So we'll just have to do what we can. I want to look at the microphone down here and the camera up there. How y'all doing? Okay. How does it? How does it look to you, cameraman?
Just looking good. Getting ready to post the outline.
So if you're just coming on right now and you're looking at the screen, you're going to see on half of the screen, we got a 3-page outline for tonight, and there are some back pages to it, about some books and some video seminars that we have. So, if you can get the outline, that would really help. Okay. People still coming on?
Yeah, there's about 24 people right now.
Okay. Well, we're planning on 100, 200 people being here tonight, so we welcome all of you, and we're going to get going here in just a minute. Okay, we're trying to just make sure everything's right. This is a new format, and I've got to get used to it, so please bear with me tonight. I've got, seriously, the camera here and the microphone there and my page over here, and I've got to look around, and I don't know how I'll do. I hope I do really well. I'm telling you, I'm really excited because we've got some great numbers tonight, some great deals to show you. Hope that there will be some really good explanations to get you on track and keep you on track, keep you going, and use the stock market as a cash flow machine. Maybe your own retirement machine. And I think after you see a couple of these deals tonight, you're going to say, wow, I can do this. And that's what I do. That's what I hope to do. When you teach a seminar business and you've got an audience that is diverse as our audience tonight, people that are from foreign countries and people that are really up on the stock market, other people are just beginners, they've read a book or two, and we want to make sure that the seminar is for everyone. But the job of an educator, especially when you're talking numbers and things like that, is to convince you, therefore I have to give you enough information to help you see that you can do what we're going to show you tonight. And you can do it right now in the market. Even though the market was crazy today, it has been the last few days, you can do it in this market. Everything I'm going to show you are real numbers from this market, and you can do it wherever you are. You can do it in your back bedroom. You can do it in your den or your office, wherever you are. And even if you're at work somewhere, lunchtime, whatever, some people even do these kinds of trades on their phone now. They get the apps for the brokerage firm, and they do the trades wherever they are. So you can do it. You can do it right now in this market. And you can do it right where you are. Okay. Are we good?
Yeah, I was cutting out a little bit. We're about 47 people in there. Julio Casablanca, and how are you doing? He says he's doing well.
Julio. Okay.
Drop down camera.
You got that, everyone? We got a drop down camera. So I'll be writing over here. I hope you see okay over here. So we'll be going here in just a minute with the real numbers. You see the link that's in the chat room, right? You have a link for this outline. So you can print out this outline, or you can just do it online. You can type right on in these boxes. It's all set up to do that. I just believe that there's a lot of strength over the long run in taking notes and writing numbers down and taking the best notes that you can. You've heard before that the ink is stronger than the best memory, and I agree. You ever hear the joke? A couple was having a hard time remembering things, and the doctor told them, we better start writing things down. Boy, I would sure like some ice cream. And so the husband said, I'll go get it for you. She goes, will you write it down? And he says, I can remember ice cream. He gets up to go to the kitchen, and he's getting ice cream and toppings and all that. His wife says, Maggie, put some of that chocolate topping on there. And please write this down. He says, I can remember this. Comes back in her ham sandwich. She looks up at him, and she says, hey, you forgot the mustard. All right. I don't know. Okay, how are we doing, Ben? We ready to go?
For the chat room, can you guys let me know if it's lagging for you at all? Is he choppy?
So did y'all hear that? He wants to know in the chat room, if you're typing, if you can let him know if I'm lagging, if my voice is lagging behind what I'm saying. Is it choppy? Choppy, choppy. Okay, so that would help us. And we're gonna be in this video business for quite a while. You know, I've been retired and I love being retired. I love being a grandpa, but I also like doing trades and I like helping people see a way out of sometimes maybe the mess that they're in and financially making more money and then developing monthly income so they can pay their bills. Okay, should I begin?
Um, just keep it slow right now. It is getting choppy. So
it's getting choppy.
Speed up, people will be missing more.
Okay.
It's peak hours right now. There's not a whole lot we can do about it.
Okay.
So I'm going to put up a poll for the chat room. I know that they can hear because I can hear myself about how long they've been in the stock market.
Yeah, you can put some information on there about you. Now, you know, I was going to welcome everybody, all you good-looking people, and I know a bunch of you are good-looking because you've been coming to my webinars, my seminars online for even a couple of years. And so I'm just hoping that some of my old friends in the stock market are here. People have been to my, you know, a long time ago to my 2-day seminar, my 3-day seminars, and all that. And, you know, tonight you're going to get basically the basics. You're going to get more of the same. And we're going to show you how to turn the stock market into your own full-time or part-time business. All right, so with that, let me begin. And so again, I'm assuming that you've got your outline there and you're going to be able to put some notes on there. I've just got some miscellaneous things that I think you should know. Okay, the first thing I want you to write, the components of the 1-2 punch. I want you to write in here position trading. When people say to me, wait, what's the difference between you and all these other guys that are, you know, teaching seminars or writing books or whatever? And it's very simple. I believe in getting our money in the way of movement, you know, up or down. Usually I like up, you know, I like call options and I like bully strategies, right? But I call it position trading. Now, sometimes I call it, you know, OMFs, other motivating factors. Sometimes I call it a forklift trade. But if you do not have a reason for doing a trade, as in the stock's going to move this way or that way, it's coming up on earnings. I'm going to talk to you about earnings in just a minute because we've had a couple really good examples the last couple of days that'll prove a point that I've been trying to make in the stock market now for 25 years, and I don't know if it's, you know, getting around. Now, one of my favorite strategies, my position trades, is stock splits. You know, there are 6 times to get in, there are 6 times to get out. You know what though? There's hardly any stock splits right now. But there is one. There is one that I think you should write down. It is a TJ Maxx. The ticker symbol is TJX. It is doing a 2-for-1 stock split on November 6th. Okay, so just jot that down. You may want to follow it. It's been around $110. If it backs off a little bit, I think it'll rally into the actual split on November 6th. And then again, I'm gonna sell you some books later on. I hope you buy them. One of those books is called Stock Splits. It's going to be part of a set, and we're going to make a heck of a deal on that. I'll tell you about that later on. But I've written a whole book on stock splits. I mean, over the years, I've made so much money on stock splits, and I like to share what I've learned, you know, with you. All right, so let's get back to position trading. What you're going to see tonight on cash flowing the stock market is literally how to take assets and turn it into income, using assets to build income. Now, if we were talking about your own business, that would be easy. You know, you open up a shop, you're making candles or cakes, it doesn't matter. But you have a business and you have money coming in through the door, people coming in, hopefully buying your product, right? If you have a piece of rental real estate, can you imagine having that rental real estate without rents coming in? You know, hopefully you have renters in there and hopefully they're taking good care of the property, but you need that income. But when people look at the stock market, you know, they look at the 3 reasons for owning stocks: cash flow, tax write-offs, and growth. Okay, which one of those 3 do you need? Cash flow, tax write-offs, or growth? I'm going to suggest that most of you watching right now need more cash flow. So tonight's seminar is about cash flow. You can't really get very many tax write-offs in the stock market. If you do a good job, you're going to create a tax problem. And this is a kind of a fun question I've asked around the country. I say, how many of you want to have a tax problem? And nobody raises their hand. And then 5 or 10 seconds later, half a minute later, people start saying, oh, I want a tax problem. You know, I mean, you're making a lot of money. Okay, so what we're going to show you tonight is a way of what I call the 1-2 punch. There are two components to that. One component is you buy stock, and the second component is you sell a call. And this is where you make the money. Now, most people don't think about the stock market. They don't treat the stock market as a way of making money, actual money in your account. Now, I know that they buy stock in companies and the companies pay a dividend, but you know, that's money that the company's making, and I don't know what effect it's going to have on the stock. Usually companies that pay dividends do a lot better, and there are some companies out there paying really nice dividends. But I got to take it to the next level. I got to show you how to take a good investment like Advanced Micro Devices. I'm going to show you a little bit on BlackBerry tonight, on AK Steel, which is a good infrastructure stock. I'm going to show you some things, but it's all about generating income in 1 or 2 days into your account. Now, when I say that, I'm talking about income where you can pay your bills, income you can take out and pay your daughter's tuition to college, income that you can, buy a rental house, right? You can two-step your money, right? So let's move on to the second one. We're going to talk about stock options, but I want to show. I want to keep this up, but I just really want to show you some great things tonight about how to turn that stock market into a business. So one thing we need to do is to get you to unload a bunch of baggage. There is so much garbage being taught out there, dollar cost averaging, there's this garbage stuff, by people who they're never going to be around to explain their actions, what they're trying to sell you, by people who always want to sell you an investment. Well, you're not going to get that here. I don't have any investments for sale, and I will not take your money and manage it. And one last thing, this is not designed to be a motivational seminar. There's plenty of people around the country that teach you rah, you can make it big in America, right? Well, that's not tonight. I want to share with you the tools. Most people don't even know that these tools exist. So one of the components is this call option. So let me explain options just a second. We're not going to spend a lot of time on this. Okay, a stock option gives you the right, well, in this case, the right to buy a stock at a certain price on or before a certain date. Now, why do people do stock options? Right? They do stock options, most people, not to buy the underlying stock, right? So what do you do when you buy an option? You buy the right to buy the stock at a certain price on or before a certain date, right? Called the expiration date. Well, most people lose money, by the way. I got to tell you, I see this happening all the time. And I see people all the time. They come into town with their seminars and we'll show you how to make money in any kind of market. And then I usually go up at the end of the seminars and I say, well, can I see your trades? No, we don't do that. Well, can I see the company's trades? We don't do that. Can I see the president of the company? Can I see his or her trades? No, we don't do that. Well, how do I? So, by the way, if I'm doing trades, I'm putting them on the internet. I'm out there. So everybody, you want to criticize me with real numbers. All right. So let's just talk about options from a different point of view. Because options, some of them are really expensive and some of them are really inexpensive. But I want to show you something. All right. Let's say that you have a stock that's at $18 and you're looking at, I'm going to show you the A stock, a B stock, and a C stock. You look at an A stock and the right to buy this stock at, say, $20 at $20. So let's go with the strike price at $20 call. So it's a $20 call. One stock, we'll call it the A stock. The right to buy that is, say, 20 cents. Well, the stock's at 18. What you're hoping for is the stock will move up very quickly and move up a lot, and you might double your money on your 20 cents. So $200 could turn into $400. $2,000 could turn into $4,000. Because I talk fast, I make that sound easy. But most people lose money in option trading. They're not ready for it because they're completely out of control. And they bought an investment that has an expiration date to it. And anytime you have an investment with an expiration date, it takes on an added element of risk. So be very careful with options. Don't just be trading them to be trading them. There's like 20 million Americans have brokerage accounts that trade in options. Well, I hope that they do well, but most people don't. All right, so let's talk about three different stocks. Same stock, one stock's at 18. Well, they're all three of them are $18, and we're looking at the $20 call option, which gives us the right to buy the stock at $20. The B stock is at 70 cents. And the C stock is at $2.10. Now,
Page this way a little bit so they can see it.
Move it up a little bit.
Yep.
Okay. Is that good? You all see it now? All right. There is a wealth of information. I could almost write a book on this column right here. The first question I'm going to ask you is, how can that be? How come one stock at $18, looking at the right to buy it at $20, how can one option be way down at 20 cents? Another one at 70, another one at 210. Well, the stock, this A stock that's at 20, the option's at 20 cents, it ain't going nowhere. It's a boring stock. There's nobody that thinks it's going to go very high. The volatility is almost zero. All right, this stock's not moving, and a lot of people believe that it's not moving, and the option is very, very cheap. Right? The B stock is at 70 cents, and that could be $700 or $7,000, right? But the B stock looks a little bit better. And by the way, I buy a lot of these B stocks, and I write covered calls on these B stocks. But look at this one. Look at this C stock, right? The option's at $2.10. Now think about that. That's pretty amazing, isn't it? You got a right to buy the stock out, say, in a month. I'm going to show you a real trade here in just a second. You have the right to buy the stock out in a month, and the option is about 10% of the stock price. Well, my goodness, that is a huge number. Most options that we trade are like 3, 4, 5% as a percentage of the stock price. That is a huge amount of money. Now, I'm going to give you the gist of writing covered calls here in just a minute. So what I'm going to suggest to you that instead of buying this option and hoping against hope that it will do something, instead of buying this option, we're going to sell it. All right. So I'm going to show you a real trade. So you can see this. I'm not making up these numbers. There are trades in the stock market right now where you can do this exact same thing. So I'm going to go down to deal number 1. So turn over to your page 2, right, and go down to deal number 1 right here and write in AMD. All right, this is one of my favorite stocks. It has been for several years. I started trading when it was around $7 or $8, and I was trading between 11 and 12, and it shot up to 14 and 15, and then it went up to 29 and 32. Now it's backed off the $26, $27 area, but it is very, very volatile. All right, so AMD, now watch this. AMD today, it was bouncing all around today, but it was at 26.50, right? I got to teach you two things at once, which is not that hard to do, but we're going to do something different, okay? So the $27 call options are going for $244 by $248. And we talked about 10%. Let me ask you something. I'm just going to ask you questions. We'll work in the writing cover calls in just a minute. If you own this stock, let's say that you own 1,000 shares. Now that's quite a lot. But so you could own 100 shares. You could own 200 shares, right? But if you owned 1,000 shares, that would be $26,500. Now, as a point of reference, if you do this trade on margin, which means you only have to put up half the money, that would be $13,250. That's called a margin trade, M-A-R-G-I-N. Your stock brokerage firm, where you have your account, will loan you the money to buy the other half of this stock. Now they'll charge you a little interest rate, so this is a form of debt. So be very careful with margin. But let's just stick with this $13,000, right? Now, in buying a call, which most people do, they would buy it over here. This is the bid and the ask. Most people would buy this option at, say, $248. That would be if you're going to do 10 contracts, each contract being 100 shares. That would be $2,480. But watch this. I'm going to show you a completely different way. Remember, we're doing the 1-2 punch. We're going to buy stock. We're going to sell a call. Remember, because the reason you're on this webinar tonight is to build up monthly income. Every letter I wrote, every advertisement we put together for this webinar was about using the stock market to generate income. Well, watch this. If you were to sell this one, you have 1,000 shares, so you could basically sell 1,000 of these. That would be $2,440. Now, what have you done? In writing a covered call, the word write means that you sell something. A covered means that you actually own the stock, and a call option is, you're thinking that the stock might go up normally. But this time we're going to sell the option. Now, when you buy an option, you have the right, but not the obligation. But when you sell an option, you have an obligation. Selling a call option, you've taken on the obligation to sell this stock to someone at $27 on or before the third Friday or whatever expiration date you're using. Now think about that. You got paid money. The marketplace, you don't have to worry about this. If there's a bid and an ask and if you're going to sell it, you can sell it. The trade will go up. It takes about 18 seconds, by the way, to get this trade off, right? And I'm going to assume right now that most of you watching have online brokerage accounts, right? Fine. Right, I've loved using my full service and my half service brokers over the years, but most people are moving to online trading. And so when I talk about things that you can do, I'm going to show you some things you can do, and that will help you make money. But right now, you're going to take in $2,440 in one day. In one day, that money will be in your account. And what have you done? What have you done? You've taken on an obligation to deliver this stock anytime on or before, say that this is, by the way, the third Friday of November. The third Friday of November. Now the stock's at $26.50. Would you be okay with that? You bought 1,000 shares at $26.50, it's $26,500, and you sell it for $27,000. You make an extra $500, right? Just in that. But you've taken on this obligation and you got paid to do that. Now, I'm not going to suggest that you retire on this amount of money, but could one spouse stay home from work or even work part-time? Now think about that. If you have $13,250 or the whole $26,500, if you don't want to do margin, you just generated $2,450 for 1 month. Now that stock is going to go up, down, or it's going to go sideways. If it stays right around here at $26.50, doesn't even go above $27, you're going to keep the whole $2,440. If the stock goes up and you get called out to use the stock, you'll find out after, say, the third Friday of the expiration date. This expiration date is the third Friday of November. You'll find out on Monday if you sold the stock. If you did, it will say account assigned, and that stock has gone out of your account, right? You sold it. You don't have to do anything. It all happens electronically, and you get to keep the money no matter what. By the way, you just made that extra $500, 1,000 shares times this 50 cents. Well, what do you think? Now, if you've never seen this before, I hope you're taking good notes, because I hope you're going to sit there and say, are these numbers for real? Well, why don't you tomorrow morning when you wake up, they usually don't have option prices on your online accounts until about, my time, 6:30 when the market opens, about 10 to 7, 6:55 a.m., maybe 7 o'clock, they start coming up with option prices. The stock is trading, the options don't start trading through their rotation for a while. But check these prices. Now, if this stock is at $27, these are probably going to be higher. But now 1 day has gone. Remember, what we're selling when we sell an option is we're selling time. Time to the expiration. Well, do you like that? I mean, I could do an all-day seminar, show you virtually everything you need to know about writing covered calls with this one stock right here. Now, I want to go back up here on page 2. I want to stress what we're doing here. We are taking assets, right? Just like a rental piece of real estate, right? That we pay $26,000 for, or $13,250 if we did it on margin. Since I've brought up real estate, can you see having a rental house? Maybe you bought a $200,000 house, right? And 240, whatever, right? And you maybe put 10% down, maybe 20% down. Let's say that you can, work a deal where you could put down $13,000 or $26,500, whatever. This is a rental property, a little 2-bedroom, 3-bedroom house, whatever. How much do you think you're going to make a month? If I'm talking real estate now, go back up here to assets. If it's a rental piece of real estate, right, and it's $240,000. If you get it for, say, $15,000 down, you're going to have about $220,000 mortgage. The payment on that's going to be around $1,400, right? Your monthly payment going out. How much do you think you can rent it for? Rents are pretty high. Well, around here they are. They're pretty high. You could probably rent it for $1,300 to $1,800. Maybe if they pay the rent on time, if they don't beat up the house, and maybe you'll make good money. Maybe you'll break even or make a little bit of money. And hopefully the house is growing in value. I mean, I cut my teeth on real estate. I made my first fortune in real estate. And you can't tease me about real estate. You can't say you're going to make all this money. A lot of people do. A lot of people don't. Most people are not cut out to be landlords. All right. Let's go back to this.
Erin has a question. She
Yes.
wants to know, how do you find the stocks?
The stocks for writing covered calls?
Yes.
Okay. Aaron, can I answer you in just a minute, okay? Because I'm going to show you a couple of them that we found today. All right. And I'll show you how I do it. And sometimes I waste a little bit of time, looking at the stock and then looking at the options. But I'll get to that in just a minute. I want to just stick with this. I don't think you're going to find too many rental properties right now that are going to make you a lot of money. They'll make some money, but not a lot. But look at this. Look at this. $13,000 is going to make you $2,400 a month. Well, what if you could do that every month? Okay, that'd be a nice income, wouldn't it? And you might be able to even do more. Now, I'm not going to spend time tonight talking about writing covered calls, but I just want to tell you something. I usually abbreviate that, writing covered calls, but I put a W after it sometimes, and that's for weekly. A lot of options still have the third Friday of the month expiration date, but there are many, thousands of companies now that have an expiration date every week, every Friday. I'm going to tell you the gist of this. And I'm going to ask you later on if you want to come around. If you really want to get more information on this, this is an amazing thing. I'm going to show you what I have found, and I've been doing these trades, and they're pretty amazing. Writing covered calls weekly using the expiration date for a Friday, you're not going to double and triple your money. But I've usually found that whatever you're going to make on a monthly, you can make it on a weekly deal. You can make almost 2 times that amount. Okay? And I'm going to say if you added up all those bids that you can sell it at, so I'm just going to say 1.5 times to 2 times that amount. Now, it's a little bit more work, right? Because you have to be around there every week and doing some things, checking it out, selling it, buying it back, whatever. All right. So there's a lot to a weekly writing covered calls. I think it's fascinating. I think that it's well worth your studying to figure it out. If you would like to turn your stock market, your trades into a literal retirement center, an income machine, then you may want to consider writing covered calls weekly. And I've got some videos and some seminars for that can show you detail. I've got some books that cover it. All right, so we'll get back to that. Okay, so let me answer Aaron's question briefly. All right, let me tell you what we're looking for, Aaron. Okay, what we're looking for in these covered call stocks. Okay, there are several things. One is we need some volatility. What does that mean? Some speculation. We need some movement. We need a stock. Now here we go. We need a stock. Okay, let's say a $10 stock. We need a stock that will, oops, sorry, I didn't mean to put a cent sign there. $10 stock. We need a stock that will move up and down, say 50 cents to $1 every 2 to 3 days, and then back down. 50 cents to $1 every 2 to 3 days. Now I'm talking like a $9 stock that runs up to 10, maybe up to 11, and then it backs off to 9.50 or so. If you find a stock like that, all right, let me show you one. If you find a stock like that, you'll be able to make really good money. Now this is a BlackBerry. Now Aaron, I watch TV, they come across the screen, I write down ticker symbols, 5, 6, 10 a day. I check them out on the computer, I punch up options. And because I like the weekly covered calls, you click on options, on the line that goes across the thing, you click on options, and then the date's over to the left-hand side. Every account I've been on, it's over to the left-hand side. So right now the date will say October 19th tomorrow, it'll say October 26th, whatever, November, whatever. And I like weekly, so it'll tell you right then when you click on it and it goes down, you'll be able to see whether it has weekly options. Let me tell you another thing that I like. There are some old stocks that trade under the old strike prices, $2.50 increments. We don't want those. We want options that have 50-cent in right around where the stock is. It has 50-cent incremental strike prices. So if you have a $10 stock, the call options, they'll have 950s, 10s, 1050s, and 11s. Okay, those are all the strike prices right around there. Again, so weekly options, they're just not that hard to find. I found a couple good ones. I'm going to show you three more trades, right? And I'll give you some ticker symbols to check out on your own. And as we go down this road together, let me remind all of you that I'm retired now. I like being a grandpa. Okay, you want it that way? Okay, I like being a grandpa. All right, I still do a lot of trades, but not as many as I used to do. I used to be doing hundreds a month. I opened up a Facebook page called Wade Cook's Taxi Cab, right? So just go there on Facebook, go to Wade Cook's Taxi Cab. It's free to join. It's a members only, but it's free to join. So one of us, Ben or I, will approve it, and you can get going on it. When I do a trade like 2 days ago, I mentioned one I'm going to even use tonight. I mentioned a trade. So that's what I'm looking for. I'm looking for volatility, some movement, and I like, I'm going to just put it down here. I like to make 3 to 5% a month, but I really like it when I can make 7% to 10% a month. Now, that can be based on margin or based on the stock price. But if you find a very volatile stock, and I'm going to show you some that are not very volatile, right? So like this one right here. Look at that volatility right there. Look at this. This is 5 days. This is 1 day, 2 days, 3, 4, 5. Look at those little spikes intraday. Now this is a BlackBerry. The ticker symbol is BB. Now I'm going to show you another chart on BlackBerry. You look at this one and you say, whoa, look at how high this stock was last summer. This is a 6-month chart, but look at it the last little while. Look at that little support level right there. So I like that. And then you look at this and you say, well, I wonder how it looks for a whole year. Well, let's put up a year chart. This is 1 year from today back. This stock was a lot higher, and you got to go to this spot right there. It's not up here. It's right there. So I like this stock right there. It's a Canadian company. It has a really nice business model right now. It's doing very, very well. So, I hope that helps. They're just everywhere. And let me also tell all of you, I believe that we can all make more money together than we ever can alone. This week alone, I've had a couple people, they'll get on Wade Cook's Taxi Cab and say, what do you think about Siri, S-I-R-I? And I'll say, I don't like it, but here's another one that you may want to try. All right, so let me tell you one that I found, and you'll see why. But what if we all got together and you're on the website and you come up with a stock that you like and you want to check it out, and I will give you my honest opinion. I cannot tell you what to do, and I don't have any investments for sale, but I can tell you what I would do if I had that stock, and I'll say, sorry, if it was my money, I wouldn't do that stock. I don't like it. All right. So
Tim wants to know what happens if a stock goes down.
Okay, everybody asks that question, and I've got it, Tim. I've written about it so many times in my books. Now let me go ahead and answer it, because that is a good question. Okay, so what are you afraid of when you do this? Okay, you probably shouldn't have invested if you think that the stock is going to go down, right? See, that's one of the fallacies. Now, I have had stocks that have gone down, and I'll show you those in a minute, but I'm going to talk about this in 2 parts, right? If you've got a stock that's at $9 and up to 10, then back down to $9.50, and then up to $10.50, okay, you should be able to watch this stock for 3 or 4 or 5 months before you ever get involved in it, using real money. We're going to paper trade. We're going to practice trade. And by the way, you should do every strategy, everything you do, you should do many times before you put your money in harm's way, right? So that's one thing. So let's say that this stock gets down around 9, okay, and you buy it. Again, let's say 1,000 shares. Okay, that's $9,000. or $4,500 on margin. And by the way, margin can be clear down to 30%. That's the lowest it can be. So, and some of you will only have to put up $3,000 to buy this stock. Okay, then you got a couple choices. One is you can wait for the stock to get back up to 10, or with time on your side, because there's a lot of time between now and expiration, you could just go ahead and sell, let's say, the $10 calls. Now, what if this stock goes down? I mean, you might even make money, Tim. You may make money 3 or 4 or 5 months in a row. And I got to tell you about Harold. He had almost this exact same stock, this one right here. It was on Elon. ELN was a ticker symbol, right? And then all of a sudden, his stock was right around 10. He had 1,000 shares of it, and it went down to 9. I just kept going, Tim. So what if it goes down? I don't want to be cliche, and I don't want to be flippant, but sometimes I say, oh, good, is that a better pen? Okay, so sometimes, Tim, I don't want to be flippant, but I say, so what? What did you buy this stock for? Did you buy this stock for it to grow in value, or did you buy this stock to make money, to make income? And how are you going to make money? You're going to buy a stock and you're going to sell a call. All right, so I sell a call. So right now, as a stock backs off, that was your scenario, right? The stock backs off. Instead of selling the $10 call, you may have to sell the $9 call. Well, the $9 call, oh, this is a thick pen. The $9 call, you can't sell it for 90 cents or even 80 cents. You can only sell it for, say, 60 cents. So instead of making, let's say I have 1,000 shares, instead of making 800 or $8,000, you're only going to make 600. Is that still okay? So that's one thing I want you to think about. Now, you can put in stop loss orders, but most brokerage firms don't let you do that anymore. They don't let you write uncovered calls, so they're not going to let you put in a stop loss order. If you do that, Tim, and you have a stock that's very volatile, you're going to have to watch it carefully. You have to put in alerts on your stock that you're going to sell this stock if it goes down. So you need to. I'm just going to give you a piece of advice that I think everybody should do. The one problem, I'm going to tell you 2 problems with writing covered calls. One problem is that they're boring. I'm serious. If you're a classic type A personality, this will bug you, because people want to get involved and do this, and pretty soon they're getting 2 and 3 TV screens, and they've got different brokerage firms, and they've got things all over their house. Writing covered calls. You write a call, it's there for a week or 2 or 3 or 4, and you don't do anything. As time goes away, that option that you sold for $1, let's say, goes down to 80 cents, 70 cents, 60 cents, 30 cents. It goes down. It's like watching a pot of water boil. It takes forever, right? So it's boring. And 2, what you just mentioned, the underlying stock. So there is one of your main problems. Your underlying, how do you spell underlying? The underlying stock may go down. So you got to do everything you can to prevent that. Put in stop losses if you can. Put in alerts, definitely, and watch that stock. And if it hits a certain point going down, then you sell it. You can get out of it. Or you wait for it to go down, right, and hit another level, and you start writing covered calls again at that range. That's what I usually choose to do. I've lost on a couple of them, but not very many, because I don't think I've made as much on a $9 or $10 stock as I have on a $6 or $7 stock. But I've had some $9 stocks go down to 6 and 7. Right, and I've had some like that AMD. I've had some of those that I bought at $8.60, and I was trading it between 13 and 14. Boom! One day it just shot up to 26, and a couple days later it was at 32. I had so many of those. Right? Can I tell you one that I had? I had Netflix. Is that right?
FLX, yes.
That's it?
Can you move it over to your right?
To my right? I had Netflix. I traded it 5 times in 1 month. I sold it, I bought it back, I sold. Now that's a little bit more of an intermediate strategy, but I did it 5 times. I did it 5 times 1 month on Netflix, and I did it 5 times on Qualcomm. Different months, but I did it. Okay. This was back when the stock was at $13 and $14. I was making all this money on it. It was really cool. And by the way, that $13 or $14, Netflix since that time has done a 7-for-1 stock split. And the stock today is still at $350. right? Honestly, I haven't really taken the time to do it, but I might have made just as much money holding on to this stock forever, except for, remember, cash flow, tax write-offs, or growth. At that time, I didn't want the growth. Me and most of my students, we wanted cash flow. I was making really good money. Okay, so I hope that answers your question. It's one that we constantly get, and there's something that we constantly wrestle with. Okay, then I'm going to have to go back to my green pen because this is so thick. All right, let's do another deal. All right, here's one that we found the other day. The ticker symbol is, I'm going to do General Electric here. The ticker symbol on this one is MVAX, Novavax. Huh?
You just hit the microphone.
Uh-oh.
Very careful with it.
Uh-oh, watch out, microphone. Okay, NVAX. Now watch this one. This stock was, well, today it was $1.97 most of the day, but yesterday when I was doing this one, it was at it was $1.99 and $2, okay, and up to 201 and so. Now out in 1 month, now this is the middle of October, out in 1 month, November 16th, I looked at and said, what are the $2 options going for? Now I got to ask you a question. Why would anybody buy a stock at $2 and agree to sell it to somebody else at $2? That's a good question. You should ask yourself that. Because the $2 call option out in 4 weeks, 4.5 weeks, was going for 20 cents. So if you bought 1,000 shares, that'd be $2,000. If you could do it on margin, in your account, you may not be able to do this one on margin, but that would be $1,000 of your money tied up, right? And you would take in, well, 1,000 times 20 cents is $200. What if you had 4 or 5 of these and you could take $1,000 or even $10,000 and make a 20% return? Okay, so there's one that you can check out tomorrow. Let's see, 1, 2, and 3. Okay, so the third deal we're going to do right now, and you're going to see a little bit more of a boring stock, and I'm going to give you a comparison one. All right, so I'm going to do, okay, it's AK Steel. That's the name of it. The ticker symbol is AKS. Okay, this is an interesting one. The largest steel company, I think in the world, but definitely in America, is ticker symbol X. That's a ticker symbol, it's X. That's US Steel. Okay, and it's around $28. It's been up to $40. But I look at that one, and then I look at this little $4 stock. So AKS, sorry, gotta move. Well, there's those. Man. Okay. It was at AKS was at $4.70. Now you could write, let's say for November, and by the way, there are weeklies on this. In November, you could write the 450s, or you could write the $5 calls. Okay, I'm going to show you. I'm going to show you the sorry, I'm going to show you the $5 calls. Now, a good point there. When I do options, I like to do them slightly out of the money. So if the stock's at 470, I don't go down to the 450s usually. Sometimes I do, but usually I sell the next higher strike price. So that was going for today. That was going for 23 by 24. Okay, so let's run. There's all your numbers right there. So you should be able to look at this and say, wow, that's a pretty good deal. And by the way, this one does have weeklies. Okay, so let's look at it. If you were to buy 1,000 shares of this, and you don't have to buy 1,000, you could buy 100 or 200 or 300 shares. But quick point, if you're going to write covered calls in the future, buy stock in 100 shares. Even if you can afford 115 shares or 139 shares, don't do that, because then you're going to end up with some weird stocks in your account. So do them in 100 share increments, okay? So that would be $4,700, be $2,350. So if you did it on margin, that would be the account that you have on hold. Now, where did that pen get you? That other pen, you still have it? How you doing? Are y'all hanging in there? Okay. I hope that this is worth it, because in just a minute, I'm going to show you some really cool stuff, what I call secrets of the third way. All right, and I'm not going to spend a lot of time on it, but it is a powerful lesson. All right, 23 cents. Well, how many shares do you own? 1,000. So you can sell 1,000 of those, or $230. Now, what if you, oops, sorry, $230. What you've done is you've sold the right, right? They have the right, you have the obligation to deliver. Somebody has now the right, they purchased it, right? They may have paid 24 cents. You sold it for 23, so the broker made a little bit of money. All right, they've got the right to buy your stock at $5. And they paid you $230 and you got that money in one day. Now the position is on hold, during that whole time, unless you get called out early or something, which you hardly ever do, right? But you got $230 and you're now going to sell this stock at what? At $5. Well, look at this. If you sell the stock at $5, the stock's at $4.70, up to $5, there's 30 cents. So that 30 cents times your 1,000 equals what? Equals another 300. So you would have, if you get called out, you would have $530. Question for you. What if the stock doesn't go up? What if it doesn't go up to $5? What if it goes to $4.80 or $4.90 and it doesn't go up to $5? You're not going to get it. You're not going to get called out. You're not going to have the stock bought away from you. The only time you're going to get it bought away from you is if it goes, hopefully, and stays above $5. Okay, question. Did you really buy this stock to sell it from $4.70 up to $5? I don't. Okay, so listen very carefully. I'm going to give you one of my little maxims. I don't buy options to actually exercise them and buy the stock. That's not why I do that. I buy options so that I can have the stock move up or down, and then I sell the options at a profit. Okay, I don't buy options to actually buy the stock. Now listen, here's the other side. I don't sell options to actually sell the stock. I sell options for income purposes, for taking in that $230 right there. If I make more money on selling the stock, great, right? All right, now I don't have time to go through buybacks, some really cool strategies, but I do want to, as we're winding down our time here together tonight, right? I want you to see if you'll well, what page are we on? Page 3. Okay, what if you have a bunch of money and you say, man, how much could I make? I want to make enough to quit my job. I want to make enough to retire, right? Well, if you had $1 million today and you were to put that money in the bank, what would you make? 0.5%, 1%, hopefully, right? Let's say 2%, and that's a question mark, right? That would be $20,000 a year. You have to have $1 million tied up. Well, I'm not going to tell you that you can do this, and it's a lot harder than I'm making it sound because, again, I do talk quickly. But my goodness, if you could take $1 million and get 5%, not a year, this was a year, 5%, 7%, and you could do that a month, what would that generate? Okay, so most people don't have $1 million. So what are we going to start with? I want you to look at that $20,000. This is my secret of the third way. Right? We're going to take $20,000 or 10 or 15 or whatever you can scrape together, and we're going to go out, and with that amount of money, that will buy, on margin, that will buy $40,000 worth of stock, right, on margin. What if on $40,000 you could generate 4%, 6%, or even 8%? I'm not going to say 10, right? These are up to you. And by the way, one of the coolest things about writing covered calls is you can check out all these numbers before you ever do the deal. You don't have to do the deal and hope, right? You can look at a stock price. Here's a stock price at $6.30, and the $6.50 calls are going for this. Hey, Martha, that looks like a good deal, right? You can figure it all out. You can ascertain these numbers before you ever go into the trade. So my point is that we set out, when I set out in my real estate seminars and my stock market seminars, it was simply to build monthly income. And I've done this little thing with my hands, so let me do it once more. Assets, income. Assets, income. What do you need more of? Do you need more assets or do you need more income? What lets you retire? What lets you go visit the grandkids? Is it assets or income? Well, here's a question for you. Can you have income without assets? No. Somebody, something has to be producing the income, right? I mean, a lot of you have heard the expression income producing asset. Well, for most of you, you are your only income producing asset. And if your asset doesn't go to work, there's no income. So assets or income, what do you need more of? A lot of people concentrate on building up their assets, and some people end up having to get an extra job or do other things to make money to support their assets. To me, that's not the way it's supposed to be. You're supposed to be able to take an asset, even if you have $20,000-$30,000, you could start with $2,000 or $3,000 and figure it out and get good at it. Paper trade and practice trade until you get really good at it. Okay, I want to tell you about a couple of the books and this offer that we have tonight. But right now, I'm just going to give you a couple more that I've done. Okay, I want you to check out that BlackBerry. Okay, Chesapeake Energy has been one of my favorites lately. Dad, right? Oh, I'm sorry. I'm sorry. Can't you guys follow me? All right. BlackBerry.
One more question
yes.
from Julio Lorenda. I think they're kind of the same question. They want to know, do you still recommend TC2000? If not, which tool? And also, do you prefer Charles Schwab as an online platform?
Well, okay, boy, you've asked some tough questions. I've had accounts at Charles Schwab over the years. Had accounts at Option Express, which a whole bunch of people did. Charles Schwab ended up buying them and then kind of like shutting down that company and merging everybody into Charles Schwab. So I don't feel confident in giving you an answer right now. A lot of our students use TD Ameritrade. They're using Option King. There's a whole bunch of different accounts, okay? TC2000, I think, is a great service. And yes, I would recommend that. I still would recommend TC2000. Okay, so here's just some stocks that you can, consider tomorrow. Mankind, okay, MBI, which is MBIA, a big bank. Okay, and I put BB there, okay, and Chesapeake Energy. So check all those out tomorrow, and you'll see probably around 5% to about 8% on a couple of these, all right? And that's not bad, right? So what we really want to do is generate, what we try to help people do is get to the point where they're generating, I don't know, I'm going to say $9,000 a month. And you know why I use that number? Because if you take that times a year, that's a little over $100,000 a year. And most people can live very, very comfortably on that. So, it's something to shoot for. It's something to grow into. It's something that you can try and test and get good at it, right? So let me tell you over the years what I've done. Do you all have, with your download tonight, you have the outline, right? And I don't have the third one here, Ben, but we have this set of books, right? I'll just set it down here. We have this set of books, right, which is 5 different books. This is my New York Times bestseller right here. Well, so was this one, all right? Wall Street Money Machine and Safety First Investing. Right, we have all of that for $44. That's fine. These are all ebooks, by the way, and they've been updated over the years a lot better than some of the old hardback books. So that's $44. Have a second set, so that's 9 books that I've written. A second set of 4. So here's your stock splits, which I think is awesome. By the way, Rolling Stocks probably should have been the first book that I wrote, but like on this genre, it's like my 25th book. So you got Turbo Money, which is really cool, and Spread the Wealth is all about spreads. Okay, bull put spreads, bear call spreads, and all that. So right now, you're going to have a link to this. We're going to include this as part of the price. So you get this set of books for free with this set of books. Plus, I have one more that's in your handout there. It's the 101 Ways to Make Money in the Stock Market. This is an amazing several hundred-page book, 8.5 by 11. It's more like a manual. It's more like a seminar manual. So, and it's, I think, $45, Ben. Is that what it is? 40. That one's 45. I thought it was 45. Okay, whatever. But it's all included. All right, so you get that book. So you're going to get 10 books for $44. So you can just click on that link, go there, and I'm going to tell you about one more thing, because this one here is what I think a lot of you should get. If you like what I covered tonight, my style of using real deals and real numbers, let me tell you what I put together. I put together a bunch of videos. All right, and do they have this handout, right? if they printed it out, okay. These digital seminars, how many are there now? 15, 17?
I think there's 14 available right now, but 3 more to come.
3 more coming? Okay. Building monthly income, weekly cover calls, asset producing income. This is the seminars that I've done, webinars that I've done, and there's a whole bunch of them. I'm going to suggest that it's about 15 hours, maybe 16 or 17 hours of time, and it'll be time well spent, just like hopefully this hour tonight. But there's this whole set, right? 15 or so of these videos, and they will really help. All right. So let me tell you what this is. I'm a guy that have been out doing seminars. 80,000 people have paid $4,295. We started at $36.95, but right around $4,000, 80,000 people have paid that kind of money to come to our Wall Street workshop. This that I just showed you is the equivalent of that. But if you look at the bottom of the page, it's not $4,000. It's not $3,000. And I'm going to even make a better deal than what you see right there, right? Cross off that $9.95, right? Let me tell you what we did. We made this whole set $4.95. Okay, you put it on your credit card, whatever, and you just click on the link. Now, I just got to tell you what I did about a month ago. I did a one-day seminar for a lot of people in Kenya, from Africa, the Kenyan community. We had a ball together. When I got done with this, I really wanted them to get this, and I want you to get it. I don't want you to say no to this, because I know what happens when you say yes and you have the tools and education, and when you say no. I know what happens, right? I'll just tell you, working for this company, that company, whoever's sponsoring seminars, I used to get 40 or 50%. So that was about $200. So what I did, everyone, $200. I knocked it off. So this whole set was $295. And if you do it here tonight, you click on the link tonight, you're going to go to the website, thewaycook.org. It'll take you there to the bookstore. I'm going to include the 10 books. So the $44 item. Now you can just get the books if you want, but all of these 16, 17 seminars, which I think that you'll really enjoy, right? And I'm going to throw in the 10 books, okay? And that would be all for one. Now, I told you before now about Waycook Taxi Cab. I hope that you go there. I'm trying to even do better, but I wake up in the morning and I just watch the TV and the news and all that. And I really enjoy being a grandpa. And my kids keep me busy with my 10 grandkids, right? That's 3 of them, by the way, you see on the first page here. So again, is there any more questions, Ben, before we?
Yeah. Michael want to know what the best brokerage platform or to paper trade is.
The what?
The best platform to paper trade.
Well, all right. Can I answer that question in a weird way? There are some brokerage firms that do not have a virtual trading platform or a paper trading or practice trading platform. So one of the things you should look for when you're opening up an account is, do they have a trading platform? For example, can you fictitiously take a paper amount of money, $25,000, $10,000, $100,000? Can you put it in there and trade? Now, when they do have that kind of platform, they run it real time. There's real numbers. It's really cool. Right? They still don't let you do writing uncovered calls and some other things, but it really is good to have one of those. So I know, again, I know a lot of people use Ameritrade. They've got a pretty good paper trading platform, and there's some other accounts. So you're kind of on your own. Just make sure that they have a good platform and make sure that you like it. Okay? So everyone, thanks for joining me. All right, I'm thinking about doing a seminar again, kind of following up to this seminar today. I really want to show you a bunch of things, but I'm either going to do it in 2 weeks or 3 weeks or another month. So in about another month from right now, we're going to schedule another one of these. And I want to take it, just notch it up a little bit and show you, maybe I'll spend some time at another one talking about weekly covered calls. I think you'll really, really like that. Right, but you need to get the basics down. That's why I hope you at least get the set of books. Then you can read Wall Street Money Machine and you can read the other ones, and you're going to learn about writing covered calls inside out, and that's where you need to be. Again, this has been Wade Cook. Thank you so much for joining us. See you next time.